Hi guys, and welcome to another week ahead video. Now in this upcoming week, we're going to be focusing on the Australian dollar, specifically with the RBA's next monetary policy meeting coming up. Now we had an interesting speech from Governor Lowe this week, where he basically stated that the effective lower bound for the Australian cash rate is 0.25% from a prior expected of 0.5%. And that has already caused some market participants to price in an additional rate cut for 2020. And we've also seen some interesting comments from him regarding unconventional monetary policy and QE. Now, apart from the RBA meeting, we also have important data points coming up on Monday. We have company profits as well as building approvals. And those ones will be important as they feed into the GDP Q3 numbers that we'll get on Thursday, which is a day after the RBA meeting. So lots of event to focus on for the Australian dollar this week. So let's jump to the video now and see exactly how we can prepare and possibly trade these events.
Okay, so we'll start off by looking at the current baseline for the Australian dollar. Now, the Aussie dollar saw a bit of a whipsaw last week with that ever-changing risk tone from the US and China trade developments, as well as positive and negative comments from RBA Governor Lowe. However, on balance, our bias for the Aussie dollar has shifted more bearish due to two things. Firstly, even though there has been some progress between the US and China, the uncertainty about the elusive Phase 1 trade deal should mean that the Aussie dollar should struggle to maintain any meaningful upside, and short-term gains should remain capped until there is more clarity. Secondly, in terms of monetary policy, there was both positive and negative comments from RBA Governor Lowe this week in his speech about unconventional monetary policy. On the positive side, the governor did place a fairly high hurdle for quantitative easing, saying that they would only need to do that if they see further deterioration in both unemployment and inflation. And on the negative side, the governor stated that the 0.25% represents the effective lower bound of the cash rate as opposed to the prior estimates of 0.50. Essentially, with that comment, the RBA has indicated that it is prepared to push the cash rate to 0.25%, which is another 50 basis points lower. Now, prior to these comments, the markets were expecting one more rate cut from the RBA in February 2020. However, after Governor Lowe's speech, some participants are already pricing in a second rate cut by June 2020. Now, even though the RBA noted that the economy has been showing a slight positive turning point in the previous meeting, the recent data draws a question mark over that view, especially considering the October employment report, which suffered the sharpest fall in 3 years. And we also had Deputy Governor De Bell in his speech this week saying that he noted that softer wage growth is becoming a more entrenched challenge in Australia. Now, looking at the baseline for the risk events, this week we have a few events that we need to keep track of for the Aussie dollar. On Monday, we have the release of building approvals and company profits. Now, these events will be very important considering the Q3 GDP number that we have due on Thursday. The main elements that feed into that GDP numbers are construction work done, capex, building approvals, and company profits. Now, it's important to note that both construction work as well as capex contracted in the September quarter. Thus, a miss in building approvals and company profits could signal some downside risk to the market's current 0.5% estimate or expectation for Q3 GDP. Then, in terms of the RBA meeting, the markets are pricing in just 11% chance of a rate cut in this meeting. Thus, with no move in rates expected, all the focus should fall on the accompanying rate statement. And the recent speech by Governor Lowe means that the markets will be very interested about comments regarding that effective lower bound sitting at 0.25%, especially if the bank gives forward guidance whether they expect rates to reach that 0.25% lower bound during this current rate cutting cycle. Another important point of consideration is comments about QE. Governor Lowe set a fairly high hurdle for QE by saying that the bank would only consider that if the rates are cut to 0.25% and they were still moving away from their goals for employment and inflation. Thus, any further expansion on the probability or the size or the timing of QE would be on the market's radar in this current upcoming meeting. Then, looking at some possible sentiment shifts that we can look to trade in terms of dovish dovish sentiment shifts. There's already a lot of negativity priced into the Aussie dollar following the market's expectations for those further rate cuts in 2020, as well as the pressure from the ongoing trade uncertainty. Thus, it will take a lot more bearish talk to create a substantial move lower in the Aussie dollar. However, if the RBA confirms that 2 more rate cuts are to be expected, that could see some short-term dovish moves in the Aussie. Watch out for comments relating to consumer spending and how the recent disappointing labor report might have affected their view on the need for further softer policy. Now, the bank's stance regarding QE should also be considered. In his speech this week, Governor Lowe set the hurdle for QE quite high. So any comments that signals that the bank is expecting QE to accompany a second rate cut in 2020 could see downside in the Aussie dollar, as it would confirm some of the more dovish investment bank speculations that has arisen in this prior week. Now, following that, the data event to watch is the GDP for Q3, which is released the day after the RBA. Very untimely to have such an important release the day after a central bank rate decision, but currently the markets are expecting a rebound from the prior release, so any big miss here could see a short-term dovish squeeze shift in the Aussie and would be a tradable event for the week ahead. Now, we also need to factor in the risk of the US-China trade dispute. If we see a complete breakdown in trade talks and any other announcements that mean a phase 1 deal is off the table, that would create additional downside in the Aussie dollar. Just a side note on that Q3 GDP as well. Even if we do get a complete miss across the board, we do need to take into account what happens the day prior with the RBA event. If the RBA meeting is seen as a more hawkish event, or the RBA comes out less dovish than the markets are expecting, and we see some upside, we might have a muted or a more muted reaction to a miss in the GDP. So just keep that in mind for the GDP. The GDP will be better traded in line with a dovish RBA as well. Then looking at some hawkish sentiment shifts, given the current negativity priced into the Aussie, it would take far less to see some upside develop in the week ahead. One hawkish sentiment shift we can look out for is comments from Governor Lowe. In his speech last week, he mentioned that the effective lower bound of the cash rate is at 0.25%, which has caused some market participants to already price in more rate cuts in 2020. Thus, if the RBA comes out and says that they are currently, they don't see the need to cut twice more in 2020, or do not see policy reaching that lower bound in this rate cutting cycle, that could easily see an unwind to the upside in the Aussie dollar. Now, at this stage, some market participants are expecting the RBA to introduce QE in the second half of 2020, and Governor Lowe has set the hurdle quite high for QE. So any comments that signals that QE is definitely not even remotely expected by the RBA in this current easing cycle could see some positive shifts as well. Another sentiment shift for the short term would occur if we see a surprise beat to the upside in the Q3 GDP number. Given the already bearish pressure, a beat could see a quick move to the upside, but such a beat might be short-lived, as the RBA's tone in their meeting the day before is very important for us to consider. As mentioned before, another big consideration for the Aussie remains the ongoing trade dispute between the US and China. If we see a big breakthrough between the two sides, signaling that the current sticking points between towards a phase 1 deal has been solved, that would create additional upside in the Aussie dollar next week. How to actually trade the Aussie, which pairs to pair with the Aussie in case of a dovish or hawkish sentiment shift. Now, in the case of a dovish sentiment shift, we could look to pair the Aussie with the Kiwi dollar, which has remained well supported following the recent wait-and-see policy shift from the RBNZ. And despite the ongoing trade uncertainty, the Kiwi dollar has outperformed the Aussie and the CAD in the past 2 weeks, even when we had certain risk of sentiment tones in the market. So if we do see a dovish sentiment shift, we can look to pair the Aussie with the Kiwi. In the case of a hawkish sentiment shift, we could look to pair the Aussie with the Euro, which remains fundamentally bearish given the current state of the European economy, as well as the dovish monetary policy stance for the ECB. Now, if we do get a dovish or a hawkish sentiment shift, that'll be valid for a phase 1 trade if we get a clear shift. And now, if you're interested to learn how to trade these phase 1 trades, you can check out our news trading strategy playlist on our YouTube channel, where we post weekly examples of how these events and trades play out. If we do get a phase 1 move generated by a sentiment shift, we can also look for a phase 2 pullback of that initial move. We do updates on these moves inside our tradable sentiment shifts reports inside the Forex Source terminal under the Market Insights tab, and you can see each day which sentiment shifts are in play and which ones are still valid for trading the phase 2 pullbacks. Now you can also learn about how these setups work during the live analysis webinars each day inside the Forex Source terminal.
Guys, thank you for taking the time to watch this video. If you find the content helpful and these videos helpful, please do us a favor by clicking the like and the share button. Subscribe to the channel if you haven't done so already. And as always, remember to ask any questions that you have about the fundamentals or about this video in the comment section below, and we'll make sure to get back to you guys. Until the next video, guys, cheers.